Hello everybody. Firstly, I'd just like to welcome you to this webinar where we'll be talking about the US and Chinese trade war talks and relate it to potential trading opportunities, in particular on gold and the Japanese yen, which has seen highs recently. My name is Sasha and I'm a financial analyst from the research department at Fortrade. If you have any questions, please call us and ask to speak to a senior account manager who'll be happy to help. Before I go any further, please take a moment to read our risk warning and disclaimer. I'm sure you know that although gains can be made trading CFDs, losses can be incurred too, and you need to be aware of this. Now, first off, we'd like to introduce you to what we call a market opportunity. A market opportunity is a one-page briefing containing market analysis, and our goal is to provide you with a simple-to-understand opportunity to trade on the markets. We will select an instrument such as gold or a currency pair and tell you our very best estimate on its price direction so that you can trade on it if you want to. Market opportunities are produced by the research department on a daily basis according to market conditions and based on historical evidence. This can relate to daily trading, weekly trading, or monthly trading. A market opportunity consists of fundamental analysis, geopolitical events, and technical analysis that includes a pivot point and support and resistance levels. It's important to understand it's solely your decision whether you trade on market opportunities or not. Here is an example of a market opportunity. You can see some fundamental analysis on what's going on with the euro-dollar currency pair. You can see that this is a downtrend opportunity over a weekly period, since our analysis suggests the euro would decline in value against the dollar. At the top, you can see some geopolitical events and fundamental analysis that can influence the euro-dollar currency pair. For example, the part on the situation in Italy, which has affected the euro. When using a market opportunity, it's vital to look at the pivot point on which the calculations are based. In this instance, if the price reaches 1.1381 that you can see on the left-hand side of the screen here, this shows the right moment in our estimation for opening a trading position. That's how you decided to trade on this opportunity when it was active. You can see below the trend direction and the time period. It's also important that you know how to use the stop loss and take profit options. You have support and resistance levels further down. At these points you can put a stop loss and take profit, and on the right hand side of the screen you have calculations. If you close the position using take profit, you can expect these kinds of profits at these support levels in green. If the price is going against you, then you can potentially have a loss of this amount at these resistance levels in red. Finally, profit and loss calculations are based on a one-lot trading volume. So, a brief history of the trade war. The trade war and talks between the US and China have dragged on for many months now, with both sides struggling to agree on key issues and imposing tariffs upon one another. Talks have begun again, but let's take a quick look at how we came to this damaging trade war. President Trump was elected on a platform of America First, and one of his campaign promises was to reverse what he saw was the unfair trading position of the US against its partners. For years, China has been accused of benefiting from the current trading conditions, stealing US intellectual property and taking American jobs. Since Trump's election, the world's two largest economies, the US and China, have been locked in an escalating trade battle. In 2017, the US launched an investigation into Chinese trade policies and has steadily imposed tariffs on Chinese products from 2018. So far, the US has imposed 3 rounds of tariffs on Chinese goods totaling more than $250 billion. China has responded by saying the US has launched the largest trade war in history and with its own tariffs. So how has the trade war impacted the markets? Generally speaking, the answer to this question is negatively. Whilst it's true that stocks are close to record highs, they would very likely be higher without the trade war. A report published by Bloomberg from Renaissance Macro Research earlier this year showed the S&P 500 was 11% lower than it otherwise would have been. Whatever the exact figure, we can be reasonably sure that stocks would be higher. This isn't just because of the jitters investors get on a daily basis, which affects stocks. It's because company fundamentals, earnings, and revenue are negatively affected by a trade war. Gold and the Japanese yen are so-called safe haven instruments that investors and traders tend to buy in times of geopolitical or economic uncertainty or use during a recession. This has also been the case during the US-China trade war. I'll return to this in a moment. Overall, the dollar has been supported by the trade conflict with China. The reason is that in a trade war, investors believe that the US is best suited to survive the economic impact. So let's take a look at gold and the Japanese yen and how these instruments have been trading over the past year. You can see on this chart how gold has skyrocketed by some 30% over the past year. Some of the sharpest rises occurred when trade talks between the US and China broke down. For example, the most recent breakdown occurred after negotiations failed in May, and as you can see, investors bought gold and pushed prices far higher until the beginning of September. Of course, the surprise announcement at the beginning of the month that China and the US would resume negotiations saw a decline in gold that you can see on the right-hand side of this table. The yen, on the other hand, has not been in as much demand as gold. This is due to the fact that interest rates in Japan are at historically low levels and a sluggish Japanese economy. Nevertheless, over the past year, the USD-JPY currency pair is down by 5.91%. And despite the weak economy, you can see how the pair hit a yearly low in August. So, the current state of US-China negotiations. US and Chinese deputy trade negotiators resumed face-to-face talks for the first time in 2 months last Thursday, trying to lay the groundwork for high-level talks in early October. The talks appear to have been relatively successful, as the US stated that talks were productive and constructive, and it seems that October talks will go ahead. Most analysts agree that the chances of any breakthrough are slim in the short term, unless there is a surprise climb down by the United States. It appears as if China believes its economy is able to absorb some damage, so the country is not in a rush to do a deal. There is also a belief among some Chinese senior officials that it's worth waiting until after the US elections next year, in the hopes that President Trump is voted out of office, and that a Democrat as president would likely be more willing to compromise. Some analysts believe that President Trump had planned to resolve the trade war with China before the US election. This would enable him to stand on an election platform with the reputation of a tough negotiator, fighting for US interests and seeing off the Chinese threat to US dominance of the global economy. But analysts agree that a trade deal is highly unlikely before the election. However, President Trump's recent statement that he would accept an interim deal may be a hint worth bearing in mind. What does all this mean for traders? If the latest round of talks for October does not succeed, we could potentially see gold and the Japanese yen move higher again. While if there is some success, it may influence those instruments to fall. So some other factors that influence gold and US JPY. It's important to remember that safe haven instruments like gold are heavily influenced by other factors. The most important among them are interest rates. The Fed has been cutting rates, with the most recent cut taking place on September the 18th. This has supported gold, since investors are more likely to buy gold when rates are so low, as investments that usually receive a yield become less attractive. However, current low interest rates in Japan hurt the Japanese yen, which explains why the yen has not performed as well as gold. The other factor is connected to interest rates too. The global economy is slowing down, and any further evidence of a slowdown makes it more likely that interest rates will be cut. So, poor economic data can be an early sign of interest rate cuts, which in the longer term tends to support gold. Most analysts believe that more rate cuts are to be expected. There tends to be an inverse relationship between gold and the US dollar. While one goes up, the other tends to go down. This is because the precious metal is calculated in dollars. Well, I hope that you found this webinar useful. Of course, at Fortrade we'll be following developments related to the trade war and provide plenty of information about gold prices and the USD JPY currency pair alongside many others. Please get in touch with your senior account manager for further information. Until next time, goodbye, and please join us at Fortrade again soon.